If we do have fundamentals getting stronger and the recovery really being here to stay, will it also lead to greater divergence in the markets?
Yeah, so we are in that positive camp where this unprecedented stimulus is very supportive for growth across major markets. But I think what you're pointing to there, Francine, is the leadership of that performance. And yes, we are expecting more of a rotation within markets, which means dispersion is exactly what we are expecting. And it's a great time to be much more focused on active management and more active decision making on security selection in this environment of increased dispersion and this idea that there will be winners and losers that emanate out of this unprecedented policy environment.
Could these winners and losers actually show up very quickly? So could we have a correction in certain parts of the markets even in the next couple of quarters?
Yeah, it's a question we've been asking ourselves as well, Francine. Markets are, valuations are already very challenging. We're going to go through a recalibration in economic terms where we go from peak growth into more, into a slower pace of growth. But I think the key point is that we're still expecting above trend growth throughout this year. So even though the second derivative or the momentum may slow, in absolute terms, we're still expecting significantly above trend growth across major markets, especially, I should say, in developed space, where we actually have forecasts for growth that are more than twice trend rates in the second half of this year. And so, yes, there are concerns on valuations, but we think the fundamentals are still very supportive for markets, equity markets and risk markets in general moving higher. I think that the key point, though, is that it's a recalibration, moving away from sharp moves higher, more towards a grind up in markets.